Good morning, nieces and nephews. Happy Halloween. We got a big old gap down question for the day. Who is getting tricked and who is getting the treats? Trick or treat, trick or treat. Looks like the Bears are the ones getting the treats right now with this big old gap down. Bears probably looking at the charts like hallelujah. Uh, what happened yesterday? What happened yesterday? Well, it was decent. It was a decent trading day in my opinion. Some people might not have liked it. Some people might have loved it. I enjoyed it. Trading sheep style up or down, trading with the traps, the principles of price action trading that I always give you guys. Yesterday the SPY, it started off with a trap. Right, it started off with a trap right here. I talked to you guys about the 5 daily moving average. That's this purple line right here. It's an indicator on TradingView where I can look on the smaller time frame, and still see the moving averages from the daily chart. Okay, so I have a 5 day daily moving average, a 20 daily moving average, and I'm able to see those moving average on the 15-minute chart. This purple line right here, that is the 5 daily moving average. You had a false breakdown setup. It gave us a nice bounce, hit 582 level, cleared 582. With some trap there, but then eventually hit 583.2. I think I mentioned this to you guys. Yeah, the day before, right there. Had a lot of selling pressure there the day before, and then once again selling pressure, which was strong enough this time to push it really low. So once we got that rejection, because this first breakdown of 582 didn't hit the level, but once we got the false breakdown right there and we hit the level, we was able to get a legitimate rejection, or this is a legitimate textbook false breakout setup where it hits resistant and the resistance strong enough to reject it, where it breaks down support, and then boom, it broke down 582, hit the 5 DMA. Now we bounce off the 5 DMA, but here's how you know it's a dead cat bounce. Okay, you know it's a dead cat bounce when we get a bounce off support, but it's not strong enough, as you guys can see on these candles. You get a bounce off support, but it's not strong enough to recapture the lost level. It's not strong enough to break resistant. That's how you know it's a dead cat bounce. It bounce not strong enough to break resistant, and then it breaks support where it initially bounced off of. And a dead cat bounce is usually a setup for the downside. Unfortunately though, I'm messing up here. Unfortunately though, this happened towards the end of the day. I don't know if anybody caught it. I doubt it. But if you did, amazing. But yeah, it definitely led to more downside. Had a lot of people, a lot of tickets in report earnings. We're gonna talk about them. But yeah, looking bearish right now. Why? Because we are currently below the 20 daily moving average. Let's take a look at the context. Keep in mind, guys, these are all these setups are reported in my Discord, okay? In my Discord. Come check out my Discord. You guys will love it. If you love my pre-market and after-market analysis, you'll really love my intraday analysis as well, I think. But let's take a look at the context on the daily chart here, guys. All right? The red line, 5 daily moving average. Yellow line, 20 daily moving average. Now, if you guys recall, I had that structure. All right? I had that structure of the ascending triangle pattern. When we broke it down, it was a beautiful, beautiful day trade to the downside. Okay, if you play it level to level style with runners, you probably had a great day like Uncle Charters did. However, unfortunately, the bearishness did not continue the day after. As a matter of fact, they decided to give us a bounce, retested the structure as resistant. As you guys can see, we never recaptured the structure. We had some washes above, looked like they went stop loss hunting. If anything, we can see it in hindsight now. But all that selling pressure managed to push us back down, and we are currently around 575-ish. All right. So overall, the breakdown of that structure not only broke down, but it held on the back test, allowing the market makers to probably go stop loss hunting or something. That to me is still, for the short term, bearish. Okay. Yeah, based on that context, So now from here, it's like, what is next? What is the next plan of action, okay, for the bull case and the bear case scenario? So we're around 575.7 right now. The 20 daily moving average is around 579. Well, it's around 578.6. It dropped down. It might drop down a little lower now when the market opens. But I do have a fib level at 578. I'll be overall bearish below 578 and especially the 5 daily moving average. I try to give bulls the benefit of the doubt when I saw the dip buyers stepping up at the 20 daily moving average, but they failed to clear critical resistance levels. I mentioned 583.2, I mentioned 584.5, I mentioned 586. Didn't clear any of those levels, and now I guess with help from earnings we're dropping, giving us an exhaustion gap. And exhaustion gaps are a lot of times put in tops. Okay, so now's the time for Ron Walker to call a top if he wants to call a top. He probably already did like 20,000 times though. Anyways, so the next support that I have right now is at 574. And I think we could drop all the way down to 570. And if that fails, the 50 daily moving average is all the way down at 568-ish. It could slope up a little bit to 568.5-ish, around that area. But overall, if support at 574, 572, and 570 fail, we could go and test that 5 daily moving average, 50 daily moving average, excuse me. I would expect we get an initial test on the 50 daily moving average. I would expect an initial bounce. So if we do drop, that would definitely be a good take profit zone. Doesn't have to be perfect, but around that area. Don't be greedy, guys. Okay? But like I said, for this gap down to continue downwards, it need to break down more supports. How many times did I say down? And like I said, like I mentioned, 574, 572, and 570, and 568 at the 50 daily moving average. If those levels fail, 565 would be a big target. Okay? That's a previous all-time high back in July. It's a previous strong buy zone. When we cleared that level, we back tested at support. You guys remember back in early October, and it led to new all-time high. So 565 would definitely be a big target if the 50 loses. All right, guys. Now we're talking bearish case scenario here, but we as sheeps, we have to be prepared because dip buyers could probably see this as an opportunity. So we have to be prepared in case it turns out to be bullish. Okay, I have, like I said, the fib level at 578. I'll only trust the bounce if we can clear that level. I have a minor resistance level 576 and then 578. Both those levels must clear. Bulls need to get above the 20 daily moving average. So make sure you get on your charts, have a 20 daily moving average in your chart, 5 daily moving average in your chart, and you watch. If the price action clears those moving average, that could be a bottom in. We could be headed back to the top, head to all-time highs. A bottom could be in. But I can't consider that if we are below the 20. So if you're a bear, you want to see price stay below the 20 on any bounce. And if you're a bull, you want to see the 578 level. You want to see the 20. And you want to see the 5, which is around 580 right now, all recapture. And if they do, you want to look to long. This is what I mean. You react to the price action. Okay? Triple Q, big old gap down. Look at this. This is incredible, guys. Let me get to the daily chart here. Big old gap down. Yeah. Let me see. Let me make sure I have this correct because I have this uptrend line. All right. Yep. I have multiple tests. It's correct. And based on that today, keep in mind we had an inside candle set up yesterday. We had an inside candle set up yesterday. The low of the mother candle was at 493.8. We are below that. Definitely an exhaustion gap if we can stay below. Now that uptrend line that I'm trying to watch is at 490. Okay, you guys hear me? 490. This uptrend line. Bulls need to step up there. If we go and test it for a 4th time, bulls need to step up there at 490 because if we lose 490, guys, bearish. Right now, below 493.5, I'm bearish. And if we lose 490, I am extremely bearish, okay? So support right now is at 492 and 490. Both level fail, get bearish. I am bearish. To be bullish, we need to recapture 493.5 and clear 495 and 497. And then I would be bullish again. But first step, get back above 493.5. Okay, we lose 492, 490, bearish. NVDA, I have these all on my small time. I was trading these yesterday. Yeah, it's below, it's around, it's testing that 137 level. I mentioned the potential W pattern that could be playing out on NVDA. All right, double, this is the top right here. One of the tops right there. One of the tops right there. And then the low of the M pattern would be right there. Okay, so it need to break down 137 today. If it can break down 137, we are heading down lower, down to 135, 133, 131.5, guys. It's got to break down 137 to go short. All right. And if we ought to be bullish, it's got to bounce and clear 139 to 141. 139 and 141 must clear to trigger calls. Loss of 137, trigger puts. Tesla. What is going on with Tesla? It's around 258.5, guys. We got to keep this simple. It was a beautiful move to the upside. Island reversal, very bullish, but we had some consolidation. We had some, it's very healthy to pull back a little bit, okay? But right now, it's the pullback over. Volatility still might be around. And if it is, play it level to level. It's still money to be made, okay? So right now, if 260 clears, today 260 clears, 262, 264 will be in play. With 266, all the way back up to 269.5 as a possibility. But first step is to clear 260 and 262. And if more downside is the plan, then 258.5 and 257 must fail to put 255 in play. Below 255, I'm favoring a deeper pullback, at least another $10 to $20 move down. All right. IWM, look at that candle on IWM. Hard rejection. It did go and hit my 224-ish area. I had a 224.5-ish fib level, 2 cents shy of it, but it was a strong rejection. Can the rejection continue? Today, after rejecting from that fib level yesterday, it needs to break down to show bearish follow through 220 and 218. If it does, that's bearish price action with 216.7 and 215 in play, okay? You got to break down 220, especially after yesterday's context, after yesterday's price action. It's got to break down 220 and 218 today, and that's bearish, okay? Now, if we get back above 222, then we can go back and test 224.5-ish, and if we clear that, we are bullish again. A bottom could be in above 224.5. Here is Apple, had some selling pressure yesterday. Can bears show follow through today? If the answer is yes, the level that must fail to indicate that to us is 228.4. Okay, 228.4. That level fails, guys. You want to look to short. It's going to be bearish with 227, 225, and possibly all the way down to 221.5 in play. Trust no bounce unless 230. Okay, unless 230 and 231.5 recaptures to put 233, 234.5, 236, and 237.2 all back in play. Trade with the behavior of the price action. Amazon had a nice gap up, but there was selling pressure. Intraday, we got to watch out for this double top now. What's the market makers going to do? Are they going to form a handle for a cup of handle or something? I don't know. But if it's bearish, then the next support that must break down is at 190 to put 188, 186, and 183.7 all in play. We got to break down 190 today. Failure to do so. Can't get really bearish now, can I? No trigger for puts. So it's got to break down 190 to give us that signal for entry. If we recapture 191.5 and clear 193, bullish. Now the double top's around 195.6. Okay, that clears. Double top canceled. We're heading up to 200. Meta. Nice gap down for Meta as well. This is a 6-hour chart. That's why you don't see the gap down. But it is gapping down. Next resistance are 576 and 577.6. If those level clears, dip buyers are stepping up. 580 plus is in play. This is a volatile stock, so it's great to trade Meta. All right, 576 and 577.6 clears. You want to go look to long. All right, supports at 574 and 572. Those levels fail. 570 is in play first, and then we could be dropping all the way down to 568, 566, 562, and 560. Those would be targets. All right, in Microsoft, let's end this with Microsoft. Big gap down as well. I cannot get bullish unless resistant clears. I have resistance at 417 and 418.7. Trust no bounce unless 417 and 418.7 can clear to put 420, 422 or higher back in play. All right, this could be an exhaustion gap, guys. This could, the top could be in, and you know it's in if it stays below those resistant levels I mentioned. All right, and then the next support's at 415.5 and 414. Those levels fail, we could drop all the way back down to 412.5, 411, 409, maybe all the way down to 405. All right, guys. So before I end it, let's take a look at the dog pool. So for SPY, gotta get in yesterday's. This is yesterday's with the pool levels. 581.5 is where the majority of activity came in for SPY. All right, that's a big dog pool level there. QQQ 500, the big 500. Add these levels to your charts, guys. 139.3. I do have a 139 level, so it's pretty close. Tesla 257.5. IWM. These are where the big money players are parking their money and selling and buying. This is where they're getting busy. Okay, this is where they have activity. So that's where I would, pay attention to. I use them as support and resistance level. IWM 221.4. Apple 230. It's one of my levels as well. Meta 591.8. And Microsoft 432.5. All right, guys. Good luck today. Hope you guys have a great Halloween later. Peace.